Welcome back once again, your number one market segment to get what you need in an hour or less and make money in the market. I'm joined by my good friend Shy here. We have a very, very, very good day for you planned. We're going to talk a few of the big names we've been talking about. We've absolutely crushed the couple of trades that we've already talked about. Rocket Lab being one of them. We were talking about this down 360s, 370s, and has since run $1 share to 466 plus. Great opportunity for a long position. We've talked DigitalOcean. That was trading lower, I believe, closer to 33, 34 bucks. That went to 40. So we're kind of just giving you all these chances to make money, and you don't want to be sleeping on those. Would you agree?
Oh, absolutely. I mean, our job is to highlight some inflection points the market's sleeping on. So we do all the hours of research so you don't have to, and you can capitalize just as much as we do.
Absolutely, absolutely. So let's open it up here. We got just to kind of set the tone for you. We're going to cover all the big names you want to see, the Teslas, the Nvidias, etc. We are going to, by the time we're done here, walk away with one passive options trade to continue our streak. I believe we have just about 28 out of the last 30 weeks. We've seen a 50% or greater return on investment on those passive options trades. So once again, free money. Maybe this should just be called free money. That's what we should call it. We should change it to free money. 100%. I'm gonna tell Porter so we can change it to free money. So you guys, there's nothing you can't do. Coming here and spending. Again, we're live every Friday, 3:30 Eastern, and every Monday at 5 o'clock Eastern, giving you the juice. So, Shy, looking at this, let's take a quick peek at the SPY. So we are pushing on all-time highs.
We can't. Are you sharing your screen?
Oh, let me pop it on the stream here too. My bad. Share screen. Bounce down. There it is. Looking at this, we broke. So remember, we talked about the last time we were live. We told them, look, if we break north of 520, that's when you really need to start paying attention. And I do believe we said if that happens, we could see 530 plus with the high of 540. So Kobe is all I'm going to say.
Until volume comes back in the market, I don't think we'll get any kind of downturn in the markets if we're still healthy above the 50-day, the 8-day EMA, 21-day EMA is not gain tested. We're balancing. Like the only chance that we get any kind of like pullback is if volume comes to play. And if you look at the volume this week, it's even more anemic than the previous week. Like the phrase sell May, go away. They forgot the first part, but they definitely believe the second part, go away in May, because nobody is really involved in the market this month with the volume aspect of it. I think this year is the type of year where people took summer months, usually light volume. Nothing really happens. I think it started early this year in May. On a week of PPI, CPI reporting, there was still no volume coming in the market at all. And because of that, trends can't be broken if volume isn't in the market in play. And since volume isn't in play, yes, I don't get confirmation that this upside bounce we've gone has legs, but at the same time, I know there won't be. I have my confidence of the minimal downturn is gaining week after week, because as volume starts getting drained from the market, the bears don't have the cojones right now to come in, test some key technicals, and bring the volume in play. Until I see volume above the 200-day moving average, we haven't even gone close to in like a month or so. I think it's going to be business as usual. Going to be some consolidation in the indices, but there's going to be some monster winners, which Austin and I will talk about later in the show. But I'll pass it back to you, Austin. I don't know if you agree with me or not, that no downturn until volume comes back in play and then gets real testy. We'll see what happens.
Yeah, no, I agree completely. I mean, again, this break of 520 right here, I believe we said 518 was number one and 520 was high confidence. In this week alone, that has happened. So again, we talked about trading those 530 and 540 calls for late June. If you followed those from the stream, congratulations. That's 100% return on your investment with little to no effort. So congratulations, and you're welcome. It's a privilege and an honor. And we talked about the overall strength and sentiment of the market. As Shai said, without that volume flooding in and beating us to death, we really are not. We don't. Not to say there's always risk, but I will say this: I sure as hell don't feel it right now. I just don't. All I see right now is free money opportunity. We're going with that title. That's a good title. Free Money Fridays. So Porter, if you're listening right now, you can go ahead and change that right now. Forget Market Watch because this has been Free Money Fridays. Tesla, very interesting here. I love this. So once again, if not to keep driving the point home here, but if you've been watching our streams, kind of told you 140 on Tesla. It's kind of like don't be an idiot. Buy the farm. That was our alerted entry. Crushed. I mean, went to 190, almost $200 from there. So easy 20% move. We're not looking for the 20% move. We want the 10 bagger, and that's what we're in position for right now. Should it hold long-term trend support? We're holding up very nicely around 177. So my question to you is, we have the vote coming. It just is looming nearer and nearer. Elon says, I'm going to do this. Elon does this. Now Delaware judge says, hey, you know what? No. You did exactly what you said. You shouldn't get the money. And I do feel like greed is kicking in, even from Tesla shareholders saying, should we give him the money? Delivered exactly what he said he would do.
They're idiots if they don't vote yes, in my opinion. If we lose Elon and Tesla, like the thesis is broken, I think fully it would become an EV play, not an AI software or even an energy play going forward. So like if you are bullish on Elon, like Elon's vision or Tesla becoming. So I made this comment last week where Tesla in 5 years, Tesla won't be known for delivering cars. They're going to be known for selling rides and fueling America. What do I mean by fueling America? Their energy storage business is off the charts. And right now, energy storage is about, the CAGR is like 40 to 50% for the next 5 years. They will be the kings of that. And again, if you notice that Elon's vision of like, he's tinkering a bit on what Tesla as an org is becoming, not what it used to be, what's becoming. It's more about selling rides via autonomous or becoming more of an AI player, becoming more robot humanoids. Like it's all about that and less about EVs. So if you're bullish on those specific growth categories that is called out, you need to vote yes for Elon to get his package. Because guess what? If you vote no, what's his incentive on staying and killing himself, sleeping on the ground floor, doing 100 hours a week work if nobody appreciates him and he doesn't get paid for all his hard work? Like it doesn't matter how much you get paid if you don't get validated by the people who kind of are hyping you up or who are benefiting just as much as you are in Tesla as 10xing their stock price, and you don't get paid for that, you'll be salty. It doesn't matter what kind of person you are, you will be salty. So I won't blame Elon if everyone votes no. He balances, creates his own other thing. I don't blame him, and that's what I would do in that situation. So I think vote yes. I don't want to be a part of a Tesla shareholder if he makes the stock price 10x, but we're not going to reward him and we're take back what we initially agreed on from greed. Like I don't want to be part of that kind of company, that kind of environment. Like I'm bouncing. So I don't know if you feel the same way, Austin.
So you're out. I mean, if it vote goes the wrong way, you're done. You're out.
And if Elon follows up and says that he's leaving the Tesla company and forming something new, then yeah, I'm out, because this instantly becomes an EV name. And if it's an EV company name, this is a $60 to $80 stock. There is an absolute Elon premium associated with the price and a lot of story rather than actual fundamentals that's justifying it being trading around 170, 180. If Elon leaves, Elon premium is gone. The forward vision narrative is gone. It's actually going to go based on pure fundamentals and them being the number one EV player in the country, which totally could be the fact without Elon. But at the same time, like you have to value now Tesla as a car company and an energy company. And if that's the case, it does not belong trading in the over $100, because look at the comps for Ford, GM. Like that's the kind of comps that Tesla needs to be comped against if Elon's not there. And it's pretty disgusting how cheap they are on the PE basis right now, those competitors, than what Tesla is right now.
Yeah, I agree totally. I mean, without the driver of Elon, this becomes a very different story and it becomes a very different situation. And I agree, it's not one that I'd particularly be excited to be a part of. I'm with you 100%. before we even were talking to each other, we were ironically saying the same thing. Like the play here is software and the licensing capability of all the data that they have. Like that's really the win there. You saw it with Tesla Solar, like ambitious sidestep. I don't think that's the move, but it kind of, to me, gave me the confidence like, okay, they're looking to explore other avenues to trade on like 100% A+ brand quality. And I think that that's kind of the future of all things business, is that the brand will dictate the success of the organization more than the fundamentals will. And I think that it's like chicken or the egg. The brand will drive probably the fundamentals of the business in the right direction. And so it's, you build brand, you kind of win either way. You win on both sides of the coin. And I think that right now I'd be very, very, I think that's why this, like, we should be ripping right now, and we're not. And I think that that is literally the only anticipation that is not on the positive side of things, is that, like, is Elon going to bounce if Tesla shareholders completely screw him over? And I would say that I'm in that camp of like, shit, this does spook me. It's the only thing that's kept me from taking a rather sizable long-term options position on this down at $140. Otherwise, that would have been a bet the farm situation for me. And I didn't, because, again, it spooked me on the off chance that this doesn't go the right direction. And I'd agree with you. I think that we'd see this down at $100 again at least. And then you'd see a little pump and like, oh, it's going to be fine. And like, but it's not. It's just not. There's not a growth story anymore.
That's the thing. It goes from growth to value. That transition, it could take years for the stock to go nowhere to start becoming a value, and that's dead money. So it makes sense that people don't want to like go gun ho on Tesla ahead of a potential nuclear event of, in case it does vote no, like something that's out of everyone's control. You don't want to like bet the farm before something like a nuclear event like that. It doesn't matter if it's a 1% chance. That 1% chance will cause you to lose 50% of your money within weeks, in my opinion. I think it's going to be a massive downturn, especially if right when that vote happens, Elon announces he's leaving. Like, it's just going to be a nasty, nasty, nasty pull, like a rug pull. So please vote yes. I think I'm fairly confident it's going to go yes, but I'm still.
When is the exact vote again?
I forgot. It's soon. Let me see.
Let's see if we could. Let's pull that up there. When is Tesla? It's June 13.
Yeah.
So I wonder if we see any sort of pump up into that.
I mean,
a little surprised that we haven't.
It's a ballsy pump if that's the case.
I feel like in this market, that's just what happens now.
Yeah, that's true.
It's just what happens. So do you understand? Tell me, maybe you understand, maybe you don't. If you don't, then it is what it is. But how does that pay structure work? Because it's like, what, for some 50 billion. How does that work? How does he get paid? Like, what is the time span of that payment?
I want to say it's instant through vested shares that took place. Like, I think they put it as, I shouldn't be speaking on this. I don't familiar enough with it, but in the corporate world, usually like this is already put aside via shares, and they're just not getting liquidated or diluted yet in the market until the whatever date is agreed on. I'm assuming that's the same case with Elon. So right now, like, they already have those shares put in place for his vested options. It's just sitting there doing nothing. I think the bull case for voting no that people are saying is like, oh, we're going to get all those shares back, which means that outstanding shares will get diminished, and it's going to be a good thing for shareholders. Not factoring in like the long-term vision of Elon and all that stuff. Like, I think that's why people wanted to vote no, because fundamentally, like, especially the boomers are saying like, oh, less outstanding shares, that means my shares worth more technically if we get all of Elon's shares back. And that's such short-term vision that it's just flawed. But I think that's the case where they already put it aside and they already have a date in place. I think they're going to use that date, whatever they agreed upon before, to initiate it once the ruling goes through as a yes.
Yeah, and their shares are only worth as much as they're worth anyway because of that. So it doesn't make any sense.
It doesn't make sense.
Potato banana. It's just nonsense. It doesn't make any sense. So that's Tesla. So I guess going back to this chart, like the main thing here to kind of keep in focus is that longevity of support. I mean, you're talking back to the early 2020 days, COVID days, where this really broke out. This blue line you see right here, this is the inflection point for Tesla. Above it, we're strong. Bullish momentum will reign supreme. Below it, run, get out of there, go fast, escape. And you can see that we've seen stronger and stronger price action. So strongest, right, just straight up bullish momentum, the upside. A little dicey, but the bulls reign supreme. And then right here, sellers couldn't even keep the price down below 170s for the week. So, or for the month, excuse me. So you're seeing price action tighten up a little bit. That's a good thing. Month over month, we're opening a little higher. Now we are trading a little lower, which you don't want to see this. You don't want to see this monthly get closed out at 176. You want to see it closed out ideally north of 185. That to me would indicate good forward strength. But again, with that intangible in the mix, you got to always be careful with stuff like this, you guys. Like that intangible is something that no one can predict or manage or trade their way through. It simply is, and it will dictate what happens from this point forward. So please keep that in mind, and do not forget to vote if you are a Tesla shareholder. I do think, as much as voting feels like a scam, I do think it's an every vote counts situation in this case, and this will directly impact your money if you are a long-term shareholder. And I would argue that it would have macro conditional effects in the market. So now the question I have is like, where do you think the money goes? Elon's gone. That money's got to go somewhere.
Oh, it's going to go to those factories. They're going to go double down in Mexico, Germany. Like they're going to.
No. I'm saying, where does investor money go?
That's what I'm saying. They're going to the company is going to get that money and reinvest.
Where do investors that liquidate Tesla?
I mean, let's talk Snowflake. I think Snowflake is the best opportunity right now in growth tech. So that's a name. We can go over this chart. So first off, Snowflake. This is a polarizing stock all of a sudden, where this used to be beloved by all the tech nerds out there at the IPO. And you're clearly seeing like it was the most expensive IPO in the history of the market. They're probably, I think, priced at 200 sales when they got launched. So obviously it was just a nosebleed valuation during some bubble time. And right now I already told the bull case on Snowflake, but I can do a 10,000 foot view on it, where data is the fuel for AI. What does that mean? AI is just the max capacity of the ceiling for AI is depending on what the data is feeling that specific AI. Doesn't matter like how revolutionary of an LLM or AI product it is. Like if they don't have the good first user data or actual high quality data to fuel it, doesn't matter. And that's why you're seeing all these partnerships with Reddit. Like Reddit just had a partnership with OpenAI this week.
Yeah.
Reddit has incredible first user data, and the ad value for that first user data in OpenAI is just immense. They didn't quantify what that partnership value is, but it makes sense. Snowflake, they were a data warehouse company. Like they're the biggest data warehouse company in the whole world. I think a third of the Fortune 500 stores their company data onto their ecosystem. So that alone is like, holy shit. That's some easy leverage that can make for some kind of Gen AI products going forward. The previous CEO, Slootman, he was an enterprise software guy. He wasn't a product guy. And at certain points, you start noticing that there are AI products within Snowflake wasn't going to market as quickly as the competitors were. And in this time where AI is the biggest tech revolution that we've seen in my lifetime since the internet, before the internet, like it's revolutionary, and it's a wild west of everyone's racing to kind of become like the leader of the race. You don't want an old school MVP guy like Slootman. You need someone who's within the weeds of AI, and that's what they got. Like they got some. Their new CEO was one of the leaders of Google before he left and started his own thing, his own AI search engine that Snowflake acquired a year ago, and he was also on the shortlist of becoming the new CEO of OpenAI with all that Sam Altman noise that happened. I think it was like a couple months ago. That just shows like he's a prominent AI figure in this whole industry. And he's now running Snowflake, which, like I said, has a third of all Fortune 500 data in it. And you just noticed their new product launch that happened a couple weeks ago. It's called Arctic, where they spent only a couple $1 million creating it, but essentially they created their own LLM within 2 months. And that was something that was like, again, I called out. Their go-to-market products for AI was lackluster, lagging, took way too long. The previous CEO, this new CEO, he just created this Arctic LLM product within 2 months. And that just shows, wow, he means all business. They're getting dinged a bit today because they just made an acquisition yesterday, rumored, of Reka, which is an LLM. If you guys don't know about Reka, it's you guys know about I just call it Anthropic, OpenAI, Llama, which is Meta. Those are the top 3 dogs of LLMs. Reka is number 4. They were valued at $300 million in 2023, and their series funding. They're probably going to acquire around 1.2 billion. The figure isn't really communicated yet, but I know it's going to be over $1 billion. That they call that out. So let's just say 1.1, $1.2 billion. Fine. For the 4th place within LLMs, getting one that's 1.1, 1.2 billion, merging it with their Arctic product they just launched, linked up with all the data they have right in their ecosystem, they're about to create a monster Gen AI benefit for all their clients that are essentially a third of the Fortune 500, increasing as we go every single quarter. So all these Fortune 500 companies, once they see this benefit from these Gen AI products that Snowflake's putting together for them in a package, it's going to become their usage of it. It's going to be incrementally more and more as the months go on. And Snowflake's business model is a consumption-based model. So essentially they tell their clients, pay as you go. Don't pay a fixed license fee, fixed seat fee, like pay as you go, and we'll charge you as you use it. Guess what? If they create an elite Gen AI package, all these enterprises are going to be using it as much as they can because it's going to make them more efficient. They're going to be more optimized when headcount's getting reduced through layoffs, and they need increased efficiency. They're going to use the Gen AI product. This is how it goes. So if Snowflake can ace this Arctic product, this Gen AI product, holy shit, it's going to be 30 to 35% CAGR for the next 5-6 years, 30% free cash flow margins. My Rule of 40 score, like I love that's my favorite growth tech metric. If they score, they're 50 plus right now for the next 2 years. If they solve this Gen AI feature package, it's gonna be a 60 plus. It's gonna be wild, like unprecedented pricing power that Snowflake can charge all the enterprises, because it takes a little over a year for you to get out of Snowflake's ecosystem to go to Databricks or whatever competitor. Enterprises won't do that right now. Like they won't.
They can't afford it.
Exactly. So like they can't afford it. A perfect example. So like they're stuck with Snowflake, and Snowflake's just going to optimize their Gen AI products. And again, they're reporting on Wednesday. So the reason I get into Snowflake is like they got dinged for that. They think they're overpaying for this Reka LLM, but in my opinion, like it's going to pay 3 to 4 folds in the next couple of years if they can create this AI package. But they're reporting on Wednesday, same afternoon as NVIDIA. So I'm going to have a panic attack that afternoon because my whole growth portfolio, it might move like 8% in one day because if NVIDIA shits the bed, Snowflake, again, like I just called this AI package for them. Like they're not going to see it in their earnings next week. It's as early innings. Like it's going to start trickling in at Q3, Q4 when enterprises have 6 months to use these packages they're putting together. So it's going to be a volatile week. I don't know. What's your thoughts on Snowflake, Oz?
I mean, dude, I hate to, use this as a term, but you can't sniff at the crack rock model. I mean, it's crack rock. It takes a year to unlever, especially with the scale as you go model. Like that's, to me, is my favorite part because I don't have to make a significant upfront investment to start leveraging this and seeing it in the bottom line of my business. Mm-hmm. This is something in which I can roll up those costs as I'm already seeing the return. And then you would argue that should a company see a quick return, What do you think they're going to do? Spend as fast as they possibly can. It's basically the ads. It's the ads model. Same way. When you learn how to efficiently scale paid advertisement, boom, your spend goes up 10x. Why? Because you can duplicate expected results. It's just a matter of how much can we spend. That's the only question they're asking. How much can we afford to spend right now? We know what the result's going to be. How much can we afford to spend? I think you're going to see companies doing the same thing here, which could mean outpaced growth, which like that's always great. But more importantly, it's like who's getting that revenue, and Snowflake is. So it's a good model to have. Now, I do think I'm still a little bit in the camp of, until somebody really nails down, like this is how we take this LLM data platform, et cetera, and turn it into, we transmute it into like quick and easy, predictable revenue, like you would an ads platform. I think once that happens across, I don't think it matters where it happens, because once it happens, everybody's going to know, and then everyone's going to be able to do it. I think that's when like you rip the cover off the ball, like you're never going to get another chance to get in at a price, even your valuation close to what you're seeing. Now, on the chart, what I like about it is like, so like for all of you that have been following this, we like to keep the technical aspect very simple. Identify a horizontal range, which is basically drawing 2-3 horizontal lines to understand here's about the top of where the price goes, here's about the bottom. This is your total volatility, right? And then we find our midpoint. The goal is to see us reset a new bottom at that midpoint. If you look at the Snowflake chart, what do you see happening here? This was our bottom, and we're on the weekly chart here. We're not looking at small time frame. This was our bottom. We push to a new high. I wouldn't reset that top just yet. We come back down. Okay, now we're starting to test that midline. So that means bottom of range, top of range. Here's our midline. We're starting to take that step up. It's just like an escalator, right? We're taking that one step up. Now we're a little bit higher. Now we push a higher high. And for any of you that know anything about technicals, higher high, good. Higher low, even better. We get a higher high, higher low. Higher high, higher low as of right now. And I would also argue that this buying strength, although marginally low volume, I wouldn't say it's like terrible, but marginally low volume, that's a lot of strength for buyers to basically, again, remember it's tug of war, you guys. That's buyers yanking the rope all the way back to their side in an instant, which would tell you that they have the market off balance, tilted in their favor, and it's resounding. It's a resounding yes. Is this undervalued? Because remember, that's all you're seeing. When the price goes down, the market keeps asking that question. Is this undervalued? Is this undervalued? Is this undervalued? And until it gets to that resounding yes, it doesn't reverse. Until the market says, stop that right now. This shit is out of control. The buyers take back in. They lever in their positions. Institutions add again. Whatever happens, happens. We can see that clearly. That's all these visuals are showing us, is that market's starting to like it with a $140 bottom. Market's starting to like it pushing above $200. Okay. Then the market says, you know what? Too much. Calm down. But the bottom is where we really make our money. Anyway, for the most people here, I'm assuming are long investors, right? This is just kind of the prototypical thesis of investing. So go long, you'll win in the end. So you want to find the best names to go long in so that you can win the biggest in the end. That's what you're seeing right here. Buyers said, you know what? I'm in. This is it. 140 was too low. Now we're saying 144 is too low, which is a good sign, right? So anytime you get into a position, you want to be finding as close to the bottom as you can, because it gives you that additional layer of security. So even with volatility, you're never going net negative. Just like case in point's Tesla. Are we going to go net negative on that $140 cost basis? Very, very unlikely, unless the trend itself changes and the thesis changes, at which point you want to get the hell out then anyway. For Snowflake, I would argue that the same is true. North of 144, we were in very good shape. Now, is that saying, hey, we're never going to see one? No. But what we're saying in explaining the potential for the growth story here is that they have already integrated they've already built their own model in which it functions like a drug to these companies. No large organization can withstand 6 months of hardship to that degree, let alone a year. So let's say, much like for anybody that's ever hooked up a boat to a trailer hitch, right? You can't just yank it off with no effort. It takes time. The car's got to be lined up. You got to have everything flat and ready. You can't have a slope behind the boat or it'll disappear, right? You got to have your blocks ready. You got to unhook the kit. It's a whole process to anyone that's ever done it, hooked up a trailer in general, right? The key ingredient being stability, flat land, so that nothing moves, because we're already introducing variable force into what we're doing. The same is true for this. Once that hitch is locked in with this company, which means customer, Snowflake, it takes quite a while to unhinge that, number one. Now we're taking that same idea, that same type of thinking, and we're attaching it to their LLM models, right? As users are able to scale up their growth and usage of the platform with their revenues, it gets even stickier. And I would also argue that very few are as scalable and have the existing size and scalable potential that they do. The name recognition, the trust, the quality of executives, very few, if any. So it's going to be a fair, unfair comparison no matter where you look in the market. So basically what we're saying is this. If you're saying here's the best leadership, best products, probably best tech stack, and best end result of working with this company, and by the way, it takes a year to unwind that train before you can really even consider beginning that new onboarding process with a new provider, which I would assume takes at least 6 months. So you're now talking about 18 months of stoppage. Revenue growth, 18 months. Let's just pause it for 18 months. You ask anyone that runs a business, hey, would you be cool if we just paused your new incoming revenue for 18 months? No, because we wouldn't be in business. So what we're telling you is that moat is a very powerful thing. And you can build moat in a number of different ways. It could be you have a product that nobody else can build because it's proprietary and nobody understands it. You could have the best possible manufacturing facility and materials and workforce. You could have the best product market fit of anyone else. So even in a competitive landscape, you just make the most sense. You could have the best executive team. Like there's a million ways to build a moat. And what I just described to you is 5 to 6 ways in which they have built theirs. Not just one, 5 to 6. So when we talk about these like long-term, like as he calls them, the mini monsters, like you want to find the edge, like who has the best potential? We never know. It's never a guarantee, but who has the best possible footing? That's the only one I want to find because there are no guarantees. Again, I can't get it. Ever since you said it, this is the best way I ever put it, that the fundamentals teach you what to buy. Technicals can teach you when to buy and when to sell. This one, I would say in applying that philosophy, we just went through a lot of the fundamentals, like not even just the financials, but just the fundamentals of the business as a whole. And then I just explained to you the technicals, higher high, higher low, another higher high, another higher low. Cool. You do the math.
I'll play devil's advocate a bit here.
Sure.
First off, all right, like I said, just we threw a lot at you. Just remember this one phrase. Data is what will fuel, is the gasoline that fuels AI. And Snowflake is the best data player out there. You know who also agrees? Who doesn't invest in tech companies at all, except for one, and it was Apple and his gold mine. Buffett bought Snowflake at IPO at 150.
Big Daddy Warren.
He doesn't invest in tech. He's very risky. Like he's just like doesn't touch it unless he sees something revolutionary. He bought at 150 and Snowflake defends 150 like a champ. So all I have to say is Warren Buffett, he rarely gives me a stamp of approval on my growth stocks because that's on him. That's fine. He knows his lane. I know my lane. He gave a stamp on this name. But devil's advocate, being my corporate strategy hat on, which I've been in for 10 years for across multiple industries, when you make a big announcement like this a week before their earnings, means their earnings won't be fireworks most likely. So next week, it might not be, they might be earnings for this past 3 months, but they might not guide up as aggressively as I would want them to. Them knowing that, I do think they're trying to make this like not mirage. It's just like this announcement is tin hat on, like, that's interesting timing of it. So let's just say they crap the bed 15%. Nothing thesis breaking about their earnings. It's just pure valuation compression. Great. I want to add more. 5-year plus mentality investor. I'll take the pain for the 3 months or 6 months. Fine. Like, let me build this position because I am so confident this will be a mega cap company. It's going to be worth 200 bill, 250 bill, because it doesn't make sense for them not to. If I fully believe that data will be the gasoline that fuels AI, it will just, a high tide raises all boats, and Snowflake will just be riding that wave, AI wave, that is already getting validated by the NVIDIAs, the semiconductors. the major infrastructure players, the AWS's, Azure's, Google Cloud, they're all validating this AI thing is real. It's happening right now. It's happening way quicker than people believe. The next component, the last stage of it, will be applications via data. Snowflake will be the leader of that. Nobody knows when that will happen. I just know for a fact it's going to. So give me some more fire sale on a best of breed name, which is really rare in the market. And I'll keep adding. But I guess we sticking to this theme, let's talk DigitalOcean, DOCN. I called out high tide raises all boats. We saw reacceleration on AWS, Azure, and Google Cloud. Who's the number four player in the space that specializes in SMBs? DigitalOcean, the only pure cloud computing play in the market right now you can invest in. All the other big dogs are called out. Like they have a bunch of noise of like e-commerce, like enterprise, all that. There's a bunch of stuff packaged into the cloud computing element. This is the only pure cloud computing name out there. And I just said SMBs have been in a recession for years. They take longer to recover than the enterprise players. And we just had a bottom in SMBs.
We did. Stocks Buddy love this. $30 on the monthly. The way I use this indicator, for those of you that do use it, is I want to wait until I get this buy signal on the monthly, and then I go back to the weekly, so shorter time frame. When I get that buy signal on the weekly, it usually means like short, medium, and long-term trend have all found alignment, and we're about to see a little bit of Rip City. Now, when you add that in with the reality here that daddy volume came in, that's a boomstick. When you see that kind of volume come in on the buy side, what did we talk about last week? Volume always precedes a change in fill in the blank.
And it's also volume came in when the market's been anemic all month.
Yeah.
That's
so
even more of a, that's like, all right, well, all the volume went here. And that's justified because if the big dogs are growing 30+% on the cloud front for infrastructure, right now DigitalOcean is growing 12% this year with 20% free cash flow margins. It's definitely a healthy fundamentals. SMBs will be picking up steam with the big dogs in a year or so, a couple of years. Like it's going to happen. The reacceleration will happen on the SMB fronts. And once that does happen, this becomes a 20+% revenue CAGR for the next couple of years. Combine that with the already expanded margin expansion via free cash flow, they qualify for a Rule 40 score of 45 plus. And if they're valued under $5 billion right now as a small cap, with this massive like AI revolution that's happening, that infrastructure is going to be one of the main winners. High tide raises all boats. This will be a mid cap. This is going to have the Celsius run up of like it's going to be worth a couple $1 billion in a couple years.
It'll
20
double.
billion.
It'll double. So for those of you that are in the Discord, again, links at the bottom. If you want like real-time updates on all these trades we're talking about, that's where you need to go. We've been mapping this one out for quite a while. We were right around October last year when we talked about our 1, 2, 3, 4 and springboard to the future. We wanted to see our 4 successive lows with stronger volume and reversal in terms of price. We got that right here, as you see listed by number 4. Ironically, also followed by a bullish signal from Stocks Buddy. What we were looking for back then, before me and Shai even ever talked about this one, was a break above 24. So then right towards the beginning of the year, this year, we started talking about this, you and I, which is beautiful because we had been tracking, waiting for that break over 24. Obviously, $10, 30% move to the upside. Boom, done. Came back down. This is when you said, I love 32. Like, sign me up. Let's do it. Boom. Instant retracement back, pushing 40s. This candle is a little bit paltry for me. I'm not a big fan, but I do think that if we can really toe the line at $35, we very well could be seeing a bottom priced in of about 32. So basically, to put it in simple context, if I'm a buyer here at 35 to 37, that's basically saying I got 10% downside on a position trade, meaning goes below 32, I'm out. I'm going to call it a day because there's more downside incoming. And I'll come back when we break above and hold that again with over 50%. I don't want to be too ambitious and say 100% on the table because I have been scouting 2026 $50 call options because it's like at this point right here.
It's going to be $50 at the end of the year.
I'll take a 20% bath on those for the 500% upside. Basically, everything is a matter of risk reward, guys. Like, I don't care how many trades you win. You could be the guy that wins 1 out of 10, but if your risk reward is tilted 11-1, you're still not profitable. And at the end of the day, if you really want to be good at this for the rest of your life, that is the only metric you should consider in terms of your investments and your trades is what is my risk to reward and how have I done? Overall net P&L, you give a shit about one-offs. Again, you don't even have to win half your trades if your risk reward is tilted in the favor that we have described and broken down for you on many live streams. For every $1 I risk, I want to make 3. So that puts a very, very small responsibility on me to be right all the time. It means I could flip the coin, heads or tails, and I'm still coming out a winner. That's the goal here. So I do like to squeeze on over here. And I want to talk C Unlimited after this, so don't let me forget. Because I think the 2025 growth story for them via earnings is going to be something that like I want to start taking advantage of right now. So in moving to the DigitalOcean options chain here, these are a little bit bigger boy contracts because we are looking at January of 2026, giving us over a year of expiration. I'm going to give you a quick 2-minute walkthrough of how we calculate, because again, as many of you have followed us before know that options trade they function on a bell curve. We want to basically calculate our trade so that when we hit that peak of the bell curve, we are cashing out at maximum profit, which means we want the price of the stock to appreciate to its max relative value in the least amount of time at the tip of that bell curve, because time is not your friend when trading options. So we're going to break this down here to quickly look at how long it takes for this thing to move. So right here, we got 202 days. We've moved 110%. Now let's measure that same span of time in downside. Let's go about 200 days. Let's see how much we match. Oh, it's about twice as long. So we don't go as low. If we go about 200 days. So we went as low as 50%. And then let's look back here at this unbelievable move from 35. And we're aiming for, we said 50.
I think it hits 50 by this year. So I think
so you had to ruin the surprise, dude. That was the surprise waiting at the end of this. You had to
we should communicate better. My bad.
My point was to demonstrate that this moved 64%, 250 plus $1 a day, pretty much. So the acceleration here on this chart above 35 is significant enough to pay attention to, because again, 35 right here, move to 50, and we're going to get rid of this one because it doesn't matter to us as much. But just to illustrate that point that he so kindly just totally ruined for everyone. 46% to 50 plus in 14 days. So the acceleration's real here. Now, what do we have in terms of volume? That week was, where the hell is it? Oh, I have volume turned off. Hold on.
We also
22 million.
We only see the option chain right now on your screen.
Oh shit! Yeah, I forgot. So I mapped these out, so you could see that last time we were trading at 35, we moved to 50 in 57 days. This time in May of 22, we were trading at 35 plus. We moved to 50 in 14 days. And then if you continue to go back and map right here, from May 23rd to July 23rd, so in 60 days, we moved 50 plus again. So here we are, right here. Within 50 days, 2 months, we could see this back at 50. So how would we build an options trade to cater to that? Again, options function on the bell curve. If we're estimating roughly 50 days is our time to $50, okay? If that's how long it takes to get to, oh, that's a bad 5, Jesus. If it takes roughly 50 days to get to $50, then we want over 100 days on that expiration for those options. Because again, we don't want theta to start playing in our pond. We do not want that. You don't want theta decreasing the value of your contract simply because it exists. So we want to look even further, I would say, than 100 days out. And looking at the options chain here, we're going to flip back to the options chain here. I would say November of this year would give us 182 days.
I'll do it after the election so you can have some kind of premium leading up to.
Oh, I was originally thinking I like going big or going home. Like I was originally looking at like 2026 because I love a good ego blast 10x. I just
Well,
love it. I enjoy
the
it.
the the issue, the November option chains has some premium juice because of the election, so that
Yeah,
might
so we're good
diminish the
here. So if you
returns.
guys can
Yeah,
see implied volatility, we're still sub 50. I'll take it. Delta, we haven't accelerated yet. That's good. Versus some of these like Jamia, dude. There's so many options I wanted to take on that, but like, dude, the Delta's already north of 0.5, 0.6. So like, I'm not gonna. I'm
because
not.
it might be $20 stock next year. That's a crazy
It
thing.
very well will be, I would say, based on the options premium. But our goal here, guys, is to find the under the cover plays. Like we want to find the under the radar opportunities. So really quick, we're going to add this to the watch list so we don't forget. This has been trading, I'm assuming, right in the range we see it at, right? Because again, it's been floating right along here. This would give us more than enough time. The volatility hasn't beaten us to death yet. We have a strong, strong bit of money sitting here on the bid. The ask is quite high. I would not go in and take these at 235. This is not a slap the ask situation. I think you can just be patient and get this at the right price. We could even try going in at like 220 and see if it fills. I'm going to do good till canceled. And we'll just see if that fills. We're just going to sit and let it wait. I think that the potential is real here. I think that we really have like a nice opportunity to get a nice. And for those of you that aren't in the Discord, this is your first. We do this every week, so you're getting these trades every week. My goal is to kind of showcase to you here's what we're about, and hope so you come join us in the community. Get that bread and butter, baby. These streams are great, but it gets even better. Imagine taking the research and insight from this stream and applying it to actual trades in the moment. The opportunity is unparalleled, I would say. And for those that don't know, we're going to just do a 2-second little deal here. You guys have to join us. Florida, July 2024. In just a short while, we are going to be doing this live quick start masterclass in person. You're going to get, I promise, so much more than you could ever anticipated. All the things you hear us talking about between both parties here, you are going to get the unabridged, exclusive solo inside version from us personally, with the opportunity to ask questions, with the opportunity to show us your portfolio. Hey, what do you think in based on my current scale of risk, how would I think about adding in these other growth names? You'll get that insight. Things that you just can't do online. You're going to get access to new indicators. You're going to access to new strategies, things that no one else has or will have. This is going to be live exclusive event. Our community's asked for one of these for a very long time. We wanted to make it as special as humanly possible. What you're going to get, if you're not able to make 10, 15 grand in the coming months following this event, then I don't know what to tell you. Because one of the main things I'm giving away, which I did, I might have shared some of this with you. Like I built the whole group. So all like whatever, 50,000 people we have in there started following me because of my small cap screener. I mean, I put 6 years into this thing, dude, like lived and died by the screener. And it populates an average return of 21% at a striking 73% accuracy. So like, it's been monster. I mean, I'm not gonna lie, I built the whole group on those trades in the beginning. I have never released it to the public. It's my baby. It's like your spreadsheet, dude. It's my baby. I put so much into it. Like it's delusional. I'm not saying it's worth 50 grand, but in my head, it's like I put so much into it. I don't think I could sell it. So we're gonna do something a little different. For those that are coming to this event, you will be of the only 12 people that exist in life that will have that screener at your disposal. We're going to be giving that away for free. We also are giving away a brand new momentum indicator that I think is even better than Stocks Buddy, which again, unparalleled. If you don't want to learn how to do technicals, use indicators like this that make it fucking easy. And then with what Shai's going to be walking you through, like if you want to understand how he arrives at these conclusions, how he calculates that rule for you, how he breaks down these elements that sound like gibberish, you can't miss this event. So if you want to know more about the event, because again, I don't expect anybody to just sign up willy-nilly, even though 2 people have, which blew my mind. Just join the Discord, create a support ticket. We have staff waiting by to give you the info. We have 2 spots left, and that's it. So the first 10 already, they filled up quick. Again, we pitched to our lifetime members first. So if you want one of those spots, you got to get it now because they're not going to be here for much longer. So yeah, I'm sure Shai could put out a tweet or whatever for your people that want to come see you live, get a kiss on the cheek, whatever else. Just kidding, but it's going to be fun. And we're also, as a meals included, almost everything's included. We're going to be taking everybody out to a ballin' ass dinner on me. It's going to be a blast, man. It's going to be a blast. It's going to be fun.
I can't wait. I can't wait. I know a lot of my followers have been wanting to meet me in person, like to have like the one-on-one session of like, I throw a lot at it when I go over my analysis because I'm freaking passionate about what I own. Like I've done so many hours of research, listen to the leadership talk about it, do my own channel checks. Like I put in my heart in the names I own. And a lot of the times, like I do throw so much at you guys. So this is an example of an event where I can have some one-on-one time. I can like walk you through it and you can ask me hundreds of questions. And by the end of it, you're going to feel confident about what you own. You'll have that conviction that I have on all these names because you'll start seeing how I came to that conclusion. And you'll also start being confident about finding your own mini monsters potentially down the line. Like it's a game changer. And I cannot wait to meet everyone.
Yeah. Or you break it down and it's like, oh my God, I gotta, like, say you're up 10% on like 3 positions that after learning all this, you go, oh my God, these are trash. I got to get out. And you get out for a profit. Like opportunity cost is the son of a bitch.
Mm-hmm.
And what you don't realize is your money being parked somewhere else with a huge potential for downside. It's more costly than having it in a position that's not growing, in my opinion, because you guys, the only way you can lose at this game of investing is to not have gunpowder. It's like having a gun, but never any bullets. Like the gun is of no use.
Yeah.
And this is how you do that. So that's your options. Oh, wait, did we finish that? Yeah, we did. Did we finish that? We talked about, that 50 call, January 2025 expiration. I think that one is worth, I put in that order. I'm going to try to get filled at 220. I'm not hitting the ask on that. You're not getting me to overpay. Patience is everything. If you're desperate, then this is not the trade for you. If it's more than, I would say 5% of your total allocation, it's not for you. This is about not even, I have like 130 grand in this portfolio, 143 as of today. So this is a $200 options contract. Take those numbers into consideration, please, because it is important to understand if you have $500, putting half of it into something like this is probably not the move. As high conviction as the trade may be for us, it's just never the move in any capacity. So let's move on to C Unlimited here really quick.
I do want to talk Jumia after C Limited, though.
We will. So here's the schedule then. Quickly, C Unlimited, Jumia, passive options trade. Don't let me forget. We got to knock that out. It's the tried and true. Q25 growth looks. All right, let me get this on there so you all know what time it is and what's going on. So this is C Unlimited. This is the weekly chart. We do have some headwind against us. 79, 80 bucks seems to be a pretty difficult range to break up and above. But once we do sit above $70, we have in the past pushed up to it to test it. We just haven't succeeded in that break and continuation thereafter. Keep in mind, this was a $300 stock. Now, justified or not, as I'm not saying it was justified, but this one experienced that COVID run and rebound, but this was actually a real company that experienced inflated growth and unfortunately is seeing the same headwinds as a lot of these other names that were good names that ran too far, too fast, and are now overcorrecting to the downside. With a base at 37 bucks, I got to give Mr. Stocklock Profits credit. He was buying this at 40 bucks. Shai, I don't know about you. I think you were talking this name when it was 40, 50 bucks too, weren't you? So both of them were on it. I didn't. So it sucks to be me. But that volume coming in is telling me that something is a brewing. Institutions are accumulating. They have to be, or large scale buyers are. We wouldn't be seeing this kind of influx of volume. But it also tells you that the market is far more interested here than it was here, meaning that there's either still too much value or not enough. And I would bet on the other side of not enough. So I'll let Shai talk for a minute on his thoughts, and then we'll take a quick look at the NASDAQ scope of earnings to see what we can expect looking forward.
So on the chart, C Limited looks absolutely bullish. Like Oz said, I bought in the 40s. I did sell in the 60s. And I'll tell you why I did sell. Mainly because I'm overweight on e-commerce, my growth portfolio. So it's purely portfolio management. So I own Mercado Libre, which is the king of Latin America e-commerce. They absolutely have no competitor. Like that moat is one of the best moats in the whole world is Mercado Libre. Second, I have Global E, ticker GLBE. That's, if you guys don't know, it's essentially they're solving the complexity change of cross-border transactions via e-commerce. So if you guys know Shopify, the white label, the Shopify Pro or white label service that they're using is Global E. They just don't call it Global E. So Global E is my picks and shovel play of riding this e-commerce thematic globally for the next 5 years. So I love them. Pure fundamentals are amazing. Third play was Jumia, and we'll get to that later. But like I had 3 names already in commerce. Like 4, that feels I feel like there's so many opportunities out there other than Max I should be exposed to. So I sold C Limited. Why did I sell C Limited? I didn't love their corporate governance. When things got tough, they took away the GMV metric and their earnings. Like all of a sudden, like there's like we're not going to communicate anymore. It's like, okay, so you're essentially just like it doesn't work out for your narrative, and now you're going to take away from shareholders to track like how beneficial Shopee is. Ding. Another ding was they went after low quality revenue during the pandemic. They went to like all these areas in like Europe and like even Latin America, just trying to get this cheap revenue that their Free Fire, like their gaming division, was like fueling this expansion. And rather than investing in the infrastructure in Southeast Asia and making a moat for themselves via the logistic networks, they went to expand too quickly across the whole world. Major mistake, and they left their back door open for competition, like the Alibabas and like the PDDs, like Southeast. That's part of the world is highly competitive for e-commerce. Like there's a lot of major players out there, and because they didn't reinvest in the logistics networks, I was like, you just messed up too many times. Already overweight in e-commerce, so I'm gonna sell. However, things are changing now. They adjusted their take rate on their Shopee platform. They did not have a slowdown at all in the revenue. It essentially was business as usual. Boom. That was a proof of there is a moat in Shopee. I didn't know about it before because they failed so many times expanding around the world, but they just upped their take rate and essentially nothing happened on the demand front. That's a proven moat. I was like, that's interesting. Now they were going through the restructuring the past year or so of it's become profitable. Let's get some GAAP profitability. Let's get some free cash flow margins. And while we get through all the noise in the Shopee and the Garena division.
Let's get on. So what you're saying, you're giving me the nice way of saying I like other opportunities more.
I like other opportunities more, but this name, like I said, they proved they have a moat, and before they didn't. So now I can see why people are getting excited by it. But again, like their margins, I'm looking at it right now. Like they have mid-teen growth for the next 3 or 4 years, and their margins are high single digits. That doesn't scream like sexy fundamentals for me. And there's competition. I'm like, rather put my money elsewhere.
Okay. So in a 1 year to 1.5 year time horizon, if I want something that's going to bring me 50% plus, you give it a yay or a nay?
For this name right now? Yeah, I think it's going to be over $100. So right now it's at 70. That's a 50% right there.
Yep. So remember, guys, there's a million ways to splice this up. Short term, yes. Into Q2 of 2025. Mm-hmm. Really, I just want the premium. I mean, that's what I'm going to get. I want the options juice. But longevity of hold, I'm not saying that. But this is what I'm most interested in. We're reflecting from negative to positive earnings growth. In my little deal that I use, my little formula, we almost always see a nice 20 or 30% bump there. If it's an established name in a mid or greater market cap. So keep that in mind. Small cap, this does not apply. So let's then talk Jumia. I wanted to take a quick look at their earnings expectations.
I can talk Jumia earnings while you do that. So here's again, we called it out 2 weeks ago. There's no coverage on Jumia on Wall Street. It's minimal, if that.
Yeah, there's none. This is weird.
There's none. So that alone is like, oh shit, if I find gold, this could be a runner because there is no coverage. And I called it out last week. I was like,
Look at that
I
volume.
was adding the threes, and I was building my position because I saw the solvency risk was diminishing severely quarter after quarter, and the stock price wasn't going up, and it was being priced to extinction. I was like, am I finding gold? I was. And this last earnings a week ago, that was their inflection point, I think, for the mass audience. Why? They actually reported their first ever operating cash gain. This is something that was unheard of with this name. Like everyone thought they're never going to be profitable. They're going to go to zero. The Amazon of Africa that's too small of a company to succeed. No way. They just proved everyone wrong a week ago. They had a profitable quarter on the cash front. Not just that, on a constant currency basis, because I don't want to get into the Africa currency. It's fucking a shit show right now. But constant currency basis, revenue went up 60%. And what was the other? I put my notes. Gross profit went up 70%, and their SG&A costs went down 40%. This is wild numbers on a region that's, if you guys don't know about Africa, it's going to be the highest growing region next 10 to 15 years. Like everyone wants to be in Africa, but they don't have the infrastructure in play to kind of capitalize on it, except for Jumia. Jumia legit. Don't ask me how I know this, but I do. Oh. They are the Facebook and Amazon of Africa. Everyone in that region knows Jumia. If you say you work at Jumia, they think, "Whoa, you're really smart. Wow, wow." Like that's what it is. They have a massive presence there, and they have the infrastructure in place. Amazon tried going there, it failed. Jumia is showing they have an edge that nobody else does, and they're proving in the numbers. That one cash flow gain last quarter, I think that was the first sign that institutions wanted to see if they can turn around. And now they're going to pounce on this name. It's a $300 million company. I'm saying it's going to be in the 20s because they have the cash on hand to fuel the businesses, no more dilution. And I think that alone will make it a $1 billion+ company. And that's a 20-something dollar valuation right away.
Huh.
And again, it's accumulate. I can see the volume on this name. I can see you're seeing accumulation after the print last week. And this isn't just a one quarter results. This is 3 straight quarters of just pure dominant earnings. And you're seeing it get better and better and better. And like I said, I want to say it's the Amazon of Africa, but this could easily be the C Limited of Africa, of just put it together. There's nobody else in this region. And this is the name that's can you imagine being the only e-commerce player in the highest growth economy for the next 10 years and only being worth $300 million? And you just said that you can feel yourself and you just had a free operating cash flow quarter. It's the ceiling's endless. This is, I added this week. I'm trying to add every single week going forward, because this is going to be a $20+ stock.
I would agree. And I think that to speak quickly on the growth of those countries, which have often been considered, up until this point, third world countries that experienced extreme poverty and a lack of growth, those people are the most resilient, hardworking, and capable people. The advent of the internet allowed them to now gain the soft and hard skills they have the soft skills. This gives them the hard skill advantage to basically develop themselves in a digital age where you can work from anywhere. So keep that in mind. We just hired a guy from Nigeria.
Nigeria specifically is the highest growth region.
Phenomenal. Yeah. He's phenomenal. And here's the thing. We're paying him what we'd pay someone in America. Think about that.
That's a lot of money for him.
I know, but my point is, that's just going to continue. Those in the US with a number of technology related jobs should be very scared, in my opinion. A lot of these what would consider very high value skills are now because they're not something that nobody else can do. It's just they had the practice and the time in the game. It's I look at it this way. Graphic design, a lot of people have an eye for design. Not everyone had the tools until now. Mm-hmm. What does that tell you? If I'm in a country in which the dollar goes 20 times further, that means I can take a 50% reduction in pay and still be crushing it And if I could deliver the same quality of work as the guy who's sitting in like New Jersey, who charges 10 times more and delivers the same quality of work, what do you think companies are going to do? They want the quality and the talent. And ideally, if it saves money, it saves money. Like, that's the reality here. You've seen it with the VA boom. Like, you've seen all these extremely competent, technology-driven people that have these skills. The only barrier has ever been English-speaking ability. And a lot of it is just bias. Like, to be very honest, I feel like a lot of it is just bias. Like, there is a language gap, and I get that it's important, but a lot of it is just kind of a racial bias. Well, and you just kind of admit it's there. So as the internet levels the playing field and gives us exposure to different countries, just so much as it gives people in those countries exposure to English-speaking nations, English will improve. And ironically, the platforms in which they can learn English are continuing to develop and improve. You got the Duolingos of the world, which are making it from age 5. You could start learning that language. And if I lived in those countries and I had kids at that age, I would ensure that they were speaking ideally English and Spanish. I think they speak both. Because then it's like they're a Swiss Army knife, man. Mm-hmm. You can work in so many different markets. If you have those skills on top of the language, the abilities in language and the lack of language barrier, basically what we're saying is this. Their economy should see explosive growth, I think, over the next 10 years as more people continue to develop those technology-driven skills and start to take these jobs from, let's be honest, entitled, privileged Americans. It's just what's going to happen. There's no political driver of saying it. It's just economics. Same result, cheaper cost. That's where it goes. That's why everything is plastic and not metal anymore, because they found a way to deliver most of the same stability of metal products, right? I was looking at the other day. I was at this doctor's office, and they had those old school, for those of you that are like 30 and up, you'll know what I'm talking about, those old school like new tone bathroom vents that were made of all metal, and they have like the really nice dial on the wall. They were made of all steel, and they just look a lot nice. And I was looking at it like, wow, that looks so quality. It's 50 years old, looks brand new. Now you look at what they make now, it's all plastic. The shit in my house is all plastic. It's garbage. It's plastic. But it provides almost the same function, just won't have it won't last, right? But again, people are so short-sighted, they don't care anymore. Like, nobody demands. We vote with our dollars, and we have not voted for quality over speed of delivery and quantity. Mm-hmm. Jeff Bezos, case in point. So again, if you want to push quality, vote with your dollars. That's the only thing that you really have in your power. But my point is this: as those skills continue to be developed, and the graphic design element, the copywriting element, web design, like the digital landscape of your business, as that can all be created, managed, and built by people in those countries that'll work for half the wages because they can live on that and thrive. Whew. Where do you think they're going to be spending that money? They're not going to send it overseas to the U.S.
Consumer goods. And not even, let's just put our America hat on. Like right now, retail sales are weakening every single month. I think retail's going to be, consumers' discretionary spend and retail sales will be weak for years, in my opinion. If you're Amazon or even Walmart, knowing that, are you going to sit on your hands just like wait until consumers get better? No. You're going to look out for other opportunities. Where's the other explosive growth? Nigeria, Africa, those regions. Guess who has the infrastructure? Jumia. We don't have the capex or the skills. We don't have the skill set to like really start there. How about we just partner up with Jumia, invest in their company, 10 to 15% ownership, and we'll fund their growth, and we'll take some earnings from that as well. That's what's going to happen. Walmart or Alibaba or even Amazon, they're going to invest in Jumia to get that benefit of that explosive growth without all that headache costs of the failed infusion of whatever their capital is in this economy that they're not familiar with. So Jumia will just be reaping all these benefits on the consumer side and also the demand side from enterprises across the world that want exposure into this gold that they are figuring out. So again, like I almost don't want to be too bullish in this name because I'm not done adding, and I really just want to add as much as I can. But end of the day, we're here to tell you guys the massive opportunities, and this is a name that's a massive opportunity we've been saying for weeks, and I know it's doubled in 5 weeks, but I think it's just getting started.
So on that note, this is what I'm looking at. There's I think there's a little bit of arbitrage here on the dated, this strategy specifically, by which I thank you that I found this specific 2-week out passive options in passive income options trade has won at about 88% for me. So keep that in mind. At a 30% estimated return, these contracts, this spread should be sold for about 35 cents. I think it's only worth about 10 to 15 cents. So again, I posted in the details. If you don't have level 2 options, you want to learn more about them, the Discord's how you do that. But this should be an easy 30% plus trade for you if you're new to the stream. On the stream, it's in the comments. You're basically betting that the price is going to stay above $6. At which point you keep the whole premium for nothing. Bada bing, bada boom. So final thoughts. This market, again, for the event, at either one of us on Twitter, Pennyboy Stock or StockSavyShay. Just add us, leave it in the comments if you want the info on the event. Again, there's only 2 tickets left, so get it fast because they will be gone now that we're talking about it publicly. So bye-bye tickets, but that'll be cool. We're keeping the event small intentionally. So final thoughts, though, on the market going into Monday. I know we're going to be back Monday, so we'll break it down then. But Monday, you think we open green or red?
I don't think the market will move at all until Wednesday afternoon. I think if you want to capitalize on that, sell some volatility via option level 2 chains, you can do that. But everyone is on pause until NVIDIA reports their earnings Wednesday afternoon. They are the new Apple of this whole market. Like what Apple was 10 years ago, that's what NVIDIA is right now. Whatever, they're going to destroy their earnings, but it's all about their guide. Nobody knows what their guide. The trend for this earnings cycle for the semiconductor space has been, oh, the guide isn't as bullish as it has been or what I assumed to be. Will NVIDIA buck that trend? I think so, because they're obviously the king right now. So the king always executes while his minions are just trying to get to their level. So raise some capital just in case it does shit the bed. Because if NVIDIA goes down 10 to 12%, QQQ would be down 2+%. And I think volume is going to start coming back in the market, and there's going to be some bearish action, and you want to have enough dry powder on the sidelines to add these high conviction names. Like the names that Austin and I just talked about, I don't know what their price action will be. All I know is fundamentally in their thesis has been expanding, and these are the names I want to add on any kind of macro-driven pullback, and I call NVIDIA's earnings as a macro-driven pullback because they essentially are the tech economy right now. So have these names, make a list of, I don't know, 5 to 8 names that you want to add that you kind of missed the boat on, or their earnings validated a thesis that they just ran up so much. Have these names, have enough dry powder on the sidelines to add to these names if we get a pullback next week, because Wednesday will be a very volatile day, which will either be a catalyst for the next leg in the market rally, which will last for months because nothing really happens in the summer months, or this will be the catalyst that the bears needed to flood the market on causing it to correct itself another 5-6%. Either way, just have enough dry capital on the sidelines to capitalize on it.
All right. I agree. Stay posted, 5 p.m. Eastern Monday. Join us back here, Twitter, X, whatever you call it, YouTube, and then in the Discord, and let's get it. Talk to y'all later. Bye-bye.